Good morning and welcome to another edition of Roadhouse Live. We are live. Today is August 11th, 2023. We are in the final day of a week that lasted 5 days of trading. The final day, the final hours of the final week of this final week that is this week. Bender, buddy, you were
That was incredibly helpful.
I try. I do my best. I am here to make sure. If nothing else, we know what time it is. If nothing else, we know this. So yesterday, Bender, you were sitting here looking and talking about a level of probably about 30-ish handles down. Don't remember what time of the day was it was, but I would imagine we're probably within what 20-ish handles of that right
Yeah.
about now. Yeah, give or take.
Yep.
And so you're looking at this trend line area that looks to be something that could hold, could, could. It's there. So maybe it gets a little bounce. Maybe it does some other things. Um, Really, really great work in looking at it, trying to be patient yesterday and waiting for the move. Um, Really, really good work. So as we get into today, let's talk about what is triggering, this pretty interesting sell, these two big, mighty red candles on the 15 minute. And that would be PPI. PPI came in, depending on how you want to look at it. Okay, this is what's funny. Is it still trending in the right direction? Yes. Is it coming down to a level that we feel, they feel, it feels like inflation is under control and we are going to continue the trajectory? I think it's kind of a mixed bag when you look at it, to be honest. And when there's uncertainty, first thing you do is sell. First thing you do with uncertainty and sell, and that is what they did off of that data. Now, Bender, these levels that you have charted out, these things that you're kind of looking for, we can talk about the data in Europe. Their GDP numbers came in better than expected. The data, for the most part, has been pretty sound. And yet we continue to deteriorate and parse through the data that has any type of a negative undertone. That's the theme as far as kind of what's going on. um, you're the chart man. You got these charts, you got these lines, you got these levels. Break it down for us, man.
Yeah. I mean, let's start with uh, what we have gone through for the last couple of weeks and the patience aspect, right? 2 weeks ago, 3 weeks ago, whatever it was, I was talking about the fact that we could certainly get through the top of this channel trendline resistance, but that, for me personally, it was like, okay, we're banging our head up against this. It's time for me, it's time to lighten the load on some things and look to pick them up if we get that move down to the bottom of this channel. I'm going to zoom out to the daily real quick. Here is that channel on the daily going back to March 13th, forming the bottom of that. We get a tap of it here back in May on the 24th. Just this parallel channel right here. And you can see they like to, these trend lines, they like to wick them, peak just above, right? Or peak just below. I mean, we see it all the time. So, does it come all the way down to the bottom of this channel? That's what I was looking for. It doesn't mean I'll get it. This orange line right here is the 200 on the daily. So when we were up here, what I was looking for was, I said, in an ideal scenario, in fact, I said this like 2 weeks ago, if I could have it any way that I want, and you asked me, Bender, how would you set this up? I would say, I'd like to come down below the 200 and test the bottom side of this channel. And that's where I would look to pick some stuff back up. That's what I asked for. And, maybe we get that today. Maybe not. I don't know. But
We're at the
that
top of
was,
that pleasure box, correct?
yeah, this blue box right here.
Mm-hmm.
Yeah, that's a daily fair value gap. And when I first shared my screen here, I was on the 4-hour regular trading hours because I wanted to show this volume imbalance that exists right in here. Again, it's going to take quite a move down another 30, 35 handles or so. Well, now shit, we're at 67, so it ain't that far now. Got another 15, 17, 20 to fill that in. Doesn't mean it's going to stop, right at the bottom of it. Maybe they wick it below that channel, make it look even worse. Hell, maybe they pull us down to 44.30 or so. Just kind of have to see how that plays out. But I'll be looking for those signs, and I'm absolutely, if we get down in here, regardless, I will be looking for some things to pick up. So let's go back to the electronic trading hours here. And we can see these candles that we're putting in. Go to a 60 minutes. So I had this little trend line support that we bounced off of yesterday. Well, now we've broken below it, right? I can also say that this weekly fair value gap bottom doesn't matter anymore because we tested it, bounced, sold through it, played around with it, right? But let's say that's kind of out of the picture at this point. It doesn't really matter. That leaves us with this old new week opening gap top right in here, 44, 59, 25. So that's 6, 7, 8 handles below where we are currently. I'd love to see it fill this volume imbalance down here. Don't know that we get there, but I'd like to see it come down into here and maybe just below that trend line and then pop it from there or bounce it and let that kind of start that reversal.
Repair.
Mm-hmm. What the data is the data, but you have to imagine that when this was going on, when we were rejecting the top here, come down, trade back up into it, we get the Fitch news, right? That headline. It's always a question of what is priced in, right? Now we're let's see, this 46.33 top up here, and now we're almost 200 points below that. So it's like these last couple of prints and okay, what is priced in now? What is, when we talk about fair value, it's like, okay, there's price action and fair value gaps that we use for trading, but then there's also Tesla at 240. Is that fair value? Does that mean that some of these pulled? It's just I
know it's rhetorical, the question that you're asking, but that gap around 235 still exists. Like 240 would have been ideal in a lot of ways, but 235 is that much more ideal to play scoop. Again, plays in line with what you're talking about, but please go ahead.
Yep. And that's the gap being more of a technical thing, right? I'm just trying to get to the point that that this drawdown, there are cheaters that play this game, right? Like they have an idea of what's coming, what the data says before it's said, right? So they're anticipating and front running a lot of what we get once the headline comes out. Mm-hmm. And so that's why a lot of times you end up with, okay, well, the move has already happened. They started this move up in here. Okay, let's run it to the top. up here, pull back, reject. They were distributing up in here.
Mm-hmm.
So now that the prints are out and it's everybody knows now, you're telling me now they're going to sell? Now they're going to drag us down to what? 43.80? Down here 43.68 because of this data? I mean, look, could that happen? Sure, absolutely. But I lean to the side that a lot of this was anticipated, and that's why we were seeing this weakness. The flow that we saw especially the last, week coming into today was not bullish. Let's see what kind of flow they give us today. Let's see, as we get down in here, do they start coming into calls out to next month? Like, do we start seeing that money shift? And that's kind of what I'll be looking for. I want to see, I've talked about this a few times. You get the idea, you chart it out, and as it approaches those levels, let's see if flow confirms the idea. The idea being we traded to the top of this channel, we come down below the 200, down near the bottom of the channel. It gives the people on the sidelines, the people that took profit up here. When I say people, I don't really mean people. But the selling that occurred up in here to get us down here, it provides another opportunity for entry. Data prints included in that sort of, evil plan. And let's see if flow supports the idea, because right now it's just an idea. It was just an idea when we were banging up against the top of that trend line. The idea being, if we get down in here below the 200 on the daily, then, that's where I look to add some money back in. That was the idea. Now let's see if flow supports that idea. Does it stop right in here? I think it'll probably come back down into that old new week opening gap. Touch the top of it. I'd be surprised if it doesn't. Does that mean it's going to happen today, or could it happen Monday? Sure, it could happen Monday. They can rip this thing. We saw yesterday, we talked pre-market about the fact that it was kind of setting up for seek and destroy type price action. And I think they accomplished that goal. I think they gave us good range, but there was quite a few scenarios where it was like, oh, okay, I guess that's the bottom. Let's go up. Never mind. Let's rip it back down. Oh, it's going to keep going. Short it. No, it didn't get there. Instead, we're going to go back up. And then they bring it down, then rip it up and take all these people out and then just yank it back. That was the price action yesterday.
Yeah, it was tough. Yesterday was a tough day.
Yep. So, it may not be a straight shot, but I think that one thing that is still, that I'm still looking for, that I'm still waiting on, that I want to see occur is that capitulation. Big candles down, scare the shit out of people, make them think that that bottom trend line isn't going to hold. And oh my gosh, we're going back to, 4,000. Yeah. I want to see that. I don't know that we're going to get that, but, we kind of need that flush. This is what 44.85 down to 66. It's like, 20 points. I think it may take more than that. Again, I'd like to see it come down into this area right here, test that new week opening gap at a minimum, 44.59.25. And then we have this volume imbalance. And what we typically see with these volume imbalances is they don't just fill to the bottom of it and then bounce. Normally it crosses through it and then back. Right. So that would potentially put us right in here around 44.40 or so, 44.45. that would fill that in and lay a candle over it. So I can tell you right now, if we get down below that volume imbalance, I'm going to be buying. And I'll call it out if we're down there. But, I'll be looking for possible entries at the top of this new week opening gap. To see, again, I'll be looking for flow to tell me if that's going to hold. And I'll be looking for the setup in the candles. And if that doesn't look like it's going to hold and it pulls down in here, I'll be looking for it again. Yeah. And I'll be looking for those candles that, get that market structure shift, get a candle up that creates a fair value gap, pull down into it. And I'll be looking for that bounce in there. And I may start to pick up a few things this morning, being that we are below the 200 slightly, I think. Let me go back to the daily real quick. So we did poke below it. So I may start to add back in to some things this morning. If we find ourselves down in here around that 44.50 range, I'll be adding some more. That's kind of, I guess the big picture move and kind of what we were looking for. As far as coming into the morning here, because I don't want to let this idea cloud anything else or make me blind to the possibility that, we just wicked that trend line. Maybe that's all we get today. And if that's going to be the case and they want one more bounce up in here to take everybody out, I don't want to miss that, right? So let's get into the tighter time frames here. This is a 15-minute. Right now on the 15-minute, we have, there's a fair value gap right there that we're trading up into, trading through it potentially right now. And there's this one right here, probably the bigger, more important, right there at 44.80 half. And then the top of that candle, 5 minute, 15 minute, 5 minute, doesn't matter, same thing. What I do see on this 15-minute, and I'm going to mark this out right here, is this volume imbalance. Right there. So if we look for a candle to lay over it, get through it before it looks to come back, and we have this big 15-minute fair value gap right here. So I'll be looking for, if we get through this volume imbalance, see if that becomes support, or if it pulls through it, comes back down, and that becomes resistance. If it pulls through it into this fair value gap and then comes back below this volume imbalance, that would tell me that we're probably coming down here. If we get through it and that becomes support, you see that becomes support, you might be able to play it into the top of this 15-minute fair value gap back up to 44.80 half. And if it can fire through that and get a, then you can look for it to clear the top of this candle, 44.85. If that becomes support, you've got these 15-minute candles in here that have fair value gaps left behind. When you look at this chart, you go, okay, where's the liquidity sitting? There's stops there, 44.87. That's probably, in the near term, that's going to be the biggest target, is at 44.87. If it gets through that and doesn't wick it and immediately pull back down, then that takes you to 44.94 half. This becomes support, that takes you up here. Yeah. So on a move up, I think you look for this to get filled, and then this is going to be that draw, that liquidity draw where the stops are sitting, right? Anyone that was getting short right in here, they all get taken out at that 44.87. So we've got our levels below that we're watching. We talked about it. We talked about why they're there. And we've got our levels above. I think above that 618, 44.96 half is where you really would have to have your head on a swivel. If it is able to take out these stops, and these stops, that's where I would be looking for that peak above and then a potential pull. I think
All
that's about
right,
it.
very nice. Well, definitely appreciate that. Sonny, what you got, man?
Morning, everyone. Start with the news this morning. So China is lifting their ban on group tours to the US, Japan, South Korea, and parts of Europe. So definitely airlines, Visa, MasterCard, look for luxury names, things like that, pump into that. Yesterday, I had talked about this California looking to approve autonomous taxis in San Francisco, competing with Uber and Lyft. So they did pass that yesterday. Uh, Beneficiaries would be like Cruise, Waymo from Google. Tesla may also get approval as far, but Uber and Lyft are definitely going to get more competition in San Francisco because of this. Amazon is streamlining their private label business. So last week I had mentioned their meeting with the FTC or the SEC about pending antitrust lawsuit coming up against them. They had a meeting with it, and I think some of the conditions to avoid this would be for them to reduce their in-house branding. So their in-house brands are just copies of what the most popular products are selling on Amazon, and Amazon Basics is the label they come up with. So they are going to be reducing some of that, lowering their costs. Archer, Boeing, and Whisk resolved their litigation. Archer got a nice pump this morning. They're the autonomous taxi, air taxis. They also got an investment of about like $200 million. This is a short squeeze name, so keep an eye on that. Cano, I think they had postponed their ER by a day or two, so they basically said they have financial struggles. They plan to sell themselves. They are cutting staff, so things are not looking good for them right now. This one caught my eye. Was they were talking about there were a lot of they were going into money market funds. So the biggest outflows were from mining metals, financials, and tech sector, and they did put a lot of money into healthcare. So I think this rotation, but take a look at your ETFs and things, see what works for you. Covering upgrades, Rivian, PNW, Twilio, Baba, Walmart got a double upgrade. Walmart and Baba both got double upgrades, and Yeti. Downgrades are Lucid, MPW, and MRNS. And that's all.
Thank you, Sonny. So, yeah, there you have it. It's Friday. Really great breakdown, Bender, as far as showing everything, as far as what we kind of keep our eye out for is probably the best thing. As we all know, things can change quickly.
Yep.
Like really quickly. The only flow that, and some of the things that we like to look for and have looked for through the years has been put writing coming in to kind of signal some type of a bottom, some type of a reversal, something along those lines. That has been what has been fairly tried and true through the years as far as that. With that being said, I think the only ticker that I have seen that, seen actual put writing has been Meta. Meta.
I was going to say the same name. Like,
yeah.
Meta
is about
well, on
it.
Meta, they keep. I posted that on Twitter last night. Like, it seems like through the entire drawdown, like that was a name that they seem to not be afraid to buy.
Well, if you go back into the PE this and PE that, it's like Meta is still within value, even where it's
Yeah.
trading now, even trading up at 330, 340, still within value. So it's like that's not super surprising. What we do need to see, some of the names that have signaled a bottom. Apple put writing has signaled the bottom, for sure. 7-8 digit flow pumping to the upside on Tesla has signaled a bottom. Microsoft also signaled that. I think the big drain, and if several charts are out there as far as looking at semis, and then specifically Nvidia in relation to the Nasdaq. The explosion has been absurd. So that return to the mean could be very, very painful for the semi sector unless there's winners and losers somewhat created in there. Intel this held on very, very well. Was very surprised to see Intel, where it was.
I mean, it's gotten its ass handed to it,
it
and
has,
not saying it wasn't for good reason, but
but that's a good thing though, right? It's like that's there's a positive in that. They're like, no, there's more of a move to the upside than the downside. Let's go ahead and leave this thing alone for now. That all changes if we get into the game of capitulation, the game of let's go ahead and completely reset the deck. That game changes. Sure. It's like baby with bathwater. We've seen it. Everybody gets killed. Everybody. We're not even close to that scenario. Amazon holding on well. Google holding on well. A lot of these tickers, Boeing, a lot of these big names holding on well. And when we've seen these massive drawdowns, it takes a little while until the generals get shot.
Okay. And to that point, right? This move that we've seen since the top of the channel, extremely controlled, right? This is not, again, there's nothing wrong with the chart. There's been no damage done. They're not throwing everything out of the window. That's not what's going on right now. Could that change? Sure. That could change. However, right now, that's not what we're seeing. All we're seeing is this, like what we had in here, right? It's not like they threw everything out and sold everything and, oh my gosh, the world's going to end. This move is, granted, steeper, but we're not seeing that dump at all, because we don't know what's coming next, and everybody in the world's going cat. That's not what we're seeing. We're seeing this.
No.
Just
to the point that this is not your COVID market. This is not QT either. The two big drawdowns that we had were COVID one, right? It's like everybody's going to bleed out their eyes and butt, and we all going to die and maybe grow horns in our head. Still possible, but it hasn't happened yet. And then the other one was, when the inflation out of control, the inflation battle, and then the concept of QT and rising interest rates. Those were the two big drawdowns that we've had. We don't have that right now. We have inflation retreating, and we have, relatively speaking, decent data. This is, to your point. Now, this is the last thing I want to say on it is when you have CPI coming out the way it did yesterday, that looked great. And then PPI coming out today, that's like, ooh, buddy, this may be problematic. It changes the game a little bit. One data point doesn't create a trend. But if we don't get that PPI somewhat under control and inflation doesn't retreat, we're going to see a whooping back down, because what the market has and was pricing in for the most part are rate cuts into next year. You don't get any type of rate cuts if you have inflation still stagnant and pushing higher. You don't get it, especially if economic data is holding firm. And then that creates a whole different game altogether. If the economic data starts cracking hard, now you have a whole different fucking problem. So playing these levels that Bender has posted and kind of clearing the noise, we'll not only will we see when we get there, we'll deal with it at that point also. And I think that's the only way to kind of navigate if you are trading internally. The idea of opening up, and adding, 10, 15% to a position when you've had a 10% drawdown, when you have something floating around the 200, give or take, that's just smart. That's smart.
Yeah. I think trying to block out, some of the noise and really, again, like we talked about, like, I don't know how all this is going to be interpreted, and I don't pretend to, I don't try to. It's more, pick a level you like, name your price. If it gets there, and you know what the risk is, then you pull the trigger. And if it doesn't work, it doesn't work, right? If I need to, I'm looking at this chart here. This is the weekly, and I'm looking at this going, okay, what happens if we get down into here and it doesn't hold? Realistically, what could they be going after?
So,
right? Okay, well, you got this 44.11. Maybe they pull it all the way down here. Okay, that's fine. If that's the way that it works, that's the way that they want to play it. Realistically, it's another 40, 50 handles down to take the low of this weekly candle right here. Okay, fine. That's the way we're going to play. And then I can add in a little bit more.
Yeah. But
And that's
the
it.
point, it's like you never want to leverage all the way in on anything at any given point in time. It's like beating
I've never
things
leveraged
out.
all the way in ever.
I have. That's just silly.
Yeah. Well, if you don't have anything on the sidelines ever, and you get that headline that makes you go, well,
It's like-
shit, I loved it $2 ago. I really love it now, but I don't have any money.
That's when you just sit and wait, baby. That's when you're just like, okay, this is what we do. The other thing that I think is important, and we have a couple of minutes until open here, it's like everything was looking A-okay, and then we get Fitch bombed, and then we get Moody bombed, right? These were obscure things that I don't think anybody in the room, I think we all knew the potential for underlying issues. I think we've been talking about them since about, for a while now, as far as some things that are hanging out there. But the market chose to take those reports and make it an issue. Just like the market can choose to make certain data points an issue. They chose to make that an issue, and now we have a problem. That problem, as Bender is saying, could be a great buying opportunity. Just be patient along the way. That's all I got, man. You have anything else?
No, that's it. Good show. I think we did
All
a
right,
good
everybody.
job.
We'll see you soon.
See you soon.